welcome. You have tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me Cheryl D'Souza. And viewers, this is the show where you get all your stock-related queries answered by the experts. So do get ready. And also onto the Buy Now, Sell Now lens, we're going to be focusing on the metal pack and the outperformance we have seen in July or not. Will that continue? But before that, let's have a look at what the markets are up to. So Cheryl, the momentum continues for the Indian indices.
Absolutely, Shrishti, a very good morning to you. And if you look at the momentum, it definitely is continuing for the benchmark indices. Remember, yesterday it was Reliance Industries that was lending that huge support to the markets. 4% uptick is what Reliance Industries logged in yesterday's trading session. But today, actually, it is not a part of the top gainers on the Nifty. So you can say, suffice to say that the markets are holding on to really strong gains as of now. So it's Eicher Motors that is ruling the charts. 2% uptick coming for Eicher Motors, followed by Britannia, Maruti Suzuki, Power Grid, Sun Pharma, all of them seeing good gains. But on the flip side, it's very heartening to note that you have hardly even 6 to 7 stocks that are declining. And among the top losers is UPL, followed by JSW Steel, which was a winner in yesterday's trading session. Along with that, you have Hero MotoCorp, HCL Tech are the other ones that are actually declining in trade. It is also suffice to say that if you look at the breadth of the market, it is very much tilted in the favor of the advances as of now. Talking about what the sectoral indices are doing, and barring metal, all the sectors are actually gaining in trade. Realty index is just posting mild gains as of now. But yes, all the sectors are in the positive territory, with auto leading from the front, 1.4% uptick for the auto index. You have the broader markets outperforming the benchmark indices, as well as FMCG index holding on to gains of 1%. So that's the way how the markets are looking like. Pretty much of a healthy gain coming in for the benchmark indices in today's trading session, Shrishti. But yes, metals, no doubt, it is among the top. Losers in today's trading session. But we cannot take away from the fact that it has been seeing a mild recovery, isn't it?
Well, yes, absolutely a mild recovery, and especially since the start of the July month, wherein Nifty is actually up around 1%, but metal index has outperformed it with gains of almost 3%. But in the first half of calendar year 23, if we see, then the metals have been underperforming. But now is the time to bet on the metal pack, and what are the factors that are leading to this rally, especially what we have seen in the month of July. To let us know all of that from our colleague Ashesha joining us onto the show right now. Ashesha, tell us more what's happening in the metal space.
Well, yes, metal stocks are in action yet again after significantly underperforming the benchmark indices in the first half of the year. Looks like the trend is reversing. Remember, Nifty 50 index gained nearly 6% in the first half of calendar year 23 at a time when Nifty metal index was down nearly 8%. But now in July so far, Nifty metal index has outperformed with an uptick of nearly 3%. Global macroeconomic challenges, fears of recession, rising dollar, rising interest rate were the primary reasons why Nifty metal index underperformed in the first half of calendar year 2023. But looks like some sector rotation is happening, and policy support from China is also spurring some uptake as far as metal stocks are concerned. Remember, Nifty metal index hit that lifetime high of about 6,900 in January this year, and now it is off nearly 6.5% from those lifetime highs. Uptake in Chinese demand will be a key trigger for the commodity sector from now on. But as far as brokerages are concerned, analysts do believe that steel prices seem to have bottomed out from now, and export prices of HRC steel also look comfortable at this point in time. So yes, action is seen visible yet again as far as metal stocks are concerned.
All right, thank you so much for that, Ashesha, for putting all of this into context. But let's hear out from what our experts have to say, whether you should buy, hold, or exit from the metal counters, even though that they are seeing some sort of a recovery. So let's bring on board Kunal Botra as well as Rajesh Agarwal to actually understand better what should you do with your portfolio if it consists of metal stocks. A very good morning to you, Kunal, as well as Rajesh. Thank you so much for joining us on ET Now. Rajesh, let me come to you. Metal index looks like the tide is turning in favor of this particular sector. There are a lot of key triggers coming in, especially from China as well. There are talks that there could be some more stimulus underway. So in that particular scenario, do you think these triggers are the only one that you should look at while playing the metal space?
Good morning, Sheryl. Good morning, Sachin. Good morning, Kunal. You said it right. The tide is turning on the metal space. I think it's a long way to go. It has shown from the last few trading sessions that I think the shine is still there. last month China's central bank surprise cut to short-term policy rate was a surprise for the market, and that helped the metal back as well. But not to forget domestic scenario also. Domestic demand of steel is going up. Government's infra push because of upcoming elections, I think, and that is one of the factors. Debt reduction done by most of the companies, and the import duty on steel and all, these are becoming the key triggers. And the country is aiming to become a 5 trillion economy by 2030 and stays set to play a major role into that. There has been a recent rally in metal stock in the recent. I think there might be some consolidation or correction in the near future, but one should have a buy on dips kind of strategy on this. And I believe that somebody holding this stock for maybe 6 to 9 months or a year down the line may be sitting on good gains. As far as stocks are concerned, we are positive on some of the stock, Tata Steel being the first one, Jindal Steel and Power, the second one, Jindal Steel basically because of the annual ramp up, the long rails being supplied to railways, debt reduction. And in the mid-cap space, I would suggest Shyam Metallics, which is again a very good company with a good expansion plan. They have almost zero debt, I would say. And the best positive thing about the company, they have captive power, which is again aiding to their margins. So these three companies we are betting on, we have recommended to our clients. And especially Ferrous Pack is going to outperform, we.
Okay, so that's the fundamental take coming in from Rajesh, where he suggests for a buy on dip strategy and also has some top picks for you, wherein he is bullish on Tata Steel, JSPL as well as Shyam Metallics from the mid-cap space is what he's liking at this point in time. But Kunal, coming to you, because the outperformance we have seen in the July month, do you believe that this will continue for the metal pack? And because since just yesterday itself, we have seen good moves coming in on Tata Steel, Hindalco as well as JSW Steel has been an outperformer. So what's your take on the metal counters and the stocks you like?
Good morning, Srishti, Cheryl, as well as Rajesh, and to everyone. My belief is that these metal stocks are actually showing a classical phase of a rally. So in every phase of a market uptrend, we typically see that the metal stocks, they tend to participate at the second and the third phase of the market rally. And this is exactly what we are seeing right now. The metal stocks in the last couple of days, as well as over the last 1 week, has shown very good traction. Now the point is that which are the metal stocks which you can bet on if you expect this momentum to continue. Either you go with the likes of JSW Steel, which has been a proven performer and leader from the sector, or you look out for the large cap names which have been underperformers. So I think in that regards, Tata Steel, SAIL, even the likes of Hindalco and JSPL, they could actually be very strong bets. We statistically we've analyzed the metal stocks, and the beta nature for these stocks is extremely high, which means that if these stocks they get into any kind of a breakout mode, the breakout and the uptrend could be very swift and fast for these metal names. So putting that into context, I believe that short-term dips should be bottomed for the metal stocks. Tata Steel, JSW Steel, as well as Hindalco and JSPL could be top candidates for a much more stronger upmove from current levels.
Heard it from Kunal as well as Rajesh and what their views on the metal space, both of them pretty positive on this particular space. In fact, we also spoke to Gautam Shah, who is the founder, CMT and chief strategist at Goldilocks Premium Research, who believes that metals have a huge scope for run-up going ahead. Hear out his bets. They are pretty much similar to Kunal's.
Well, we are very closely looking at the metal space. Now, I think this is more of a contra view, I would say, because not many market participants are too excited about it. But the way we read the charts, I think a special move is coming. We're already seeing JSW Steel do so well, trading at lifetime highs and clearly good for a lot more. We also like the way Tata Steel is shaping up. We like the way SAIL is shaping up. And JSPL has been a favorite all along. So I think these 4 or 5 stocks which I mentioned have the potential to move up 12-15% from current levels. So that's clearly the focus area.
Okay, so those are the top recommendations from Gautam Shah as well. But with this, viewers, it's time to slip into a short break. But don't go anywhere. As we come right back, it's time to take all your stock-related queries. So start writing to us and stay tuned.
Welcome back. You're watching Buy Now, Sell Now on ET Now, and there you go. This is the show where we get you all your stock queries answered. And as you saw on your screen, you can write to us on the WhatsApp number that is now flashing on the top of your screen. Do remember to mention your name, also the stock that you're looking to invest in. If you're already invested in a particular stock, then do mention the buy price as well as the quantity or the share quantity that you have and the quantum that you want to hold a particular counter. In that way, our experts will help you better. And talking about experts, today we have Kunal Bothra as well as Rajesh Agarwal, and you can write to us on the WhatsApp number on your screen. Good morning once again, Kunal as well as Rajesh. Let me start taking the question. And this one is coming in from Satya, and it's a bit of a long question for you, Kunal. He has a very long question for you, so let me just read as is. His question is that you told him last year, irrespective of a long-term investor, one should have stop loss for any stock. So he is holding Axis Bank, ICICI Bank, IndusInd, HDFC Bank, Canada, among others. He's bought these in order to go ahead and build his wealth. So he wants to know if there's any need to fix a stop loss for these names, or he shouldn't do that, or if there is a need for a stop loss, then if you could help him on that front.
Yeah, ideally, I would believe stop loss is a must for any kind of a trade, whether it's a long term or short term. Because even if it's a long term trade, you can probably keep a stop loss, which is maybe a point where your thesis or the objective in which you've taken the trade reverses. Still, there are times when we keep 200-day moving average, for example, classical stop loss level when the market gets into a bull market phase, like what we are seeing right now in the last 2-3 months. So I think if you can keep the respective 200-day moving averages for these stocks as a stop loss, it would be a good enough proposition because these stocks are going through a very strong uptrend, and there is a possibility that these stocks can see a further uptrend. You can continue to ride on to the trend on the upside with trailing the stop loss to 200-day moving average, or else the other way to look out for as a classical stop losses would be a 20% correction from your entry price would actually be another level in which you can keep a stop loss.
Okay, moving on to the next query then. And Rajesh, coming to you for this one. This question is from Pradeep, and he's holding two names. Firstly is Apollo Microsystems. He bought 300 shares at a price of 23 rupees. And he also has Amber Enterprise, 20 shares at a price of 2,030 rupees. Wants to know that what to do next in both of these counters, what to expect from them. And at this point in time, should he continue holding these names or exit at this point in time?
See, both are doing well. Fundamentally, I would say Apollo Micro can move up to 55 odd rupees in the next 2 quarters or so. So I would say one can even add if it falls for any that to 43, 44 odd rupees. But existing holders can continue to hold. Apple, one can book profit if it moves up 5% from the current market price. That's
all right. This next one is coming in from Dev. I beg your pardon. He's writing to us from Chennai, and he wants to know whether he can start averaging Manali petrochemicals. Kunal, also what's your advice on Bata? He's already holding with an average price of around 1,500 rupees per share.
Well, I would not suggest an averaging out on Manali Petro, but Bata is something which you can look to average. I think it's an interesting chart. The stock this seems to be coming back into a bottom formation process, or at least a time-wise correction seems to be for Bata India. So I think that's the stock which you can look to average at current levels as well as look to hold on.
Okay, Rajesh, coming to you for the next one. This question is from Biswajit from Bhubaneswar, and he's holding 3,000 shares of Suzlon from a price of 7.5 rupees, sitting at a great gains right now. So how do you see this particular counter? Is that a hold or sell at this point in time, given all these news regarding the fundraise, the fundamentals of the company, or rather the operations of the company seem to be improving? How do you see this? Is there a long-term story that is in play, and should he stay invested or book profits?
Is it for me?
Yes, Rajesh, this one is for you.
See, basically, in every bull market, these kind of stocks start moving up with a whole lot of stories going ahead. Some of them materialize, some of them don't materialize. So it's very risky to take a call in counters like this. So Suzlon has a history of all those problems, which we all know. It's better to book part profits at this point of time so that your capital becomes free and carry on with your rest of the position. Fundamentally, there is nothing as such at this point of time to suggest a buy on this. So I would say book part profit so that your capital becomes free and you can continue to rest of that.
One is coming in from Mr. Rao K, and he is a long-term investor. He's bought into Ajanta Pharma, making a good set of profits. So he has 100 shares, Kunal, at a price of around 784.34 rupees per share. He's currently seeing a profit in excess of about 80%. Now he wants to know whether he should go ahead and book profits or look to average or exit.
Continue to hold on. I don't see any reason why to sell Ajanta Pharma. It's been doing consistently quite well. The stock in the short-term charts as well has gone through a mild correction. So in every periodic phase of uptrend, the stock has this odd correction which comes back maybe a 10% to 12% correction. And I think the stock is actually going through such a corrective phase right now. So once that correction it could be over, I believe that the stock should scale past over the previous highs and cross 1540, 1550 mark back again. So I think you should probably wait for at least another 10% upside even if you're looking to book out full profits or partial profits.
Kunal, coming to you for the next one. This question is from Bhardwaj, and he's holding 320 shares of Indus Star at an average price of 215 rupees. Wants to know, can he buy more at current market price, and what's the outlook maybe for the next 2 to 3 years?
Frankly, it's been a disappointing stock. I've tracked Indus Star for quite a long time, but then the stock tends to disappoint in terms of price trends. Nothing major or materialistic happens in the stock price trend over the near to medium term. So I don't see any reason why you should be holding on to the stock or looking to buy fresh unless the stock shows signs of a breakout. So I think the first breakout point which I would be looking out for Indus Star would be almost at 200 levels. Remember that the stock was almost at 450 to 470, almost a few years back. So I think in that regards, waiting out for another 35 rupees on the upside could actually be a better proposition rather than buying the stock and hoping that the trend would reverse for Indus Star. So I would suggest a buy only once the stock crosses about the 200 levels.
Okay, this next one has come from Kasi, writing to us from Tamil Nadu, and this one is for you, Rajesh. It's on Aarti Industries. Has 100 shares of Aarti Industries at a price of 477 rupees per share. Kasi is a medium-term investor. Wants to know what the strategy should be for this particular counter going ahead.
The chemical stocks have underperformed quite a lot in the recent past, but I think it's already bottomed out. Not only RT, but other stocks also. And it's a good time to accumulate if somebody has the funds. So going forward, if you don't want to add whatever holding you have, continue with that. Keep a target of 500, 520 odd rupees in the next 2 quarters and continue with the holding.
Kunal, coming to you for a metal counter advice. This question is from Hamza, and she's holding 780 shares of Tata Steel from a price of 105 rupees. Wants to know, can she buy more at this point in time, and what's the long-term outlook on this?
Well, absolutely, yes. I think it's a good time to buy the stock even at current levels. So, as I was mentioning earlier, Srishti, that I'm bullish on the prospects of these metal names, starting with Tata Steel. I think it's a time where these stocks could go into a big turnaround mode. And, it's very difficult to anticipate that what targets we can expect for these stocks because of the high beta nature that if the stock moves into a higher or a stronger degree of uptrend, the targets could be significantly higher than where they are right now. So you have to play out every part of the trend. I think you've bought Tata Steel at an attractive price of 105 approximately. Even at current levels, I think it's a definite hold as well as an add. Specifically, if you're a high risk, or a risk of high risk taking client, as well as an individual who would want to prefer holding on to the stock with a time frame of at least 6 months plus.
Okay, this next one that I have is coming in from Chandrasekhar, writing to us from Hyderabad. Wants to know about ONGC. He's not basically mentioned his buy price or whether he is already holding. I'm unsure of that particular front. But in case he's already holding this particular counter, what should his strategy be? Rajesh, should he stay put with ONGC or look at other names in the oil and gas field altogether?
See, unless he is a very long-term investor, I think one should switch to oil marketing companies like IOC or PCL at this point of time. Because as we all know, crude is trading between $70 and $80 from a very long period of time, and there are no signs of crude inching up despite the fact that OPEC has announced production cut. So it's no point sticking on to the ONGC, rather switch to oil marketing.
Okay, Kunal, coming to you for the next question. This question is from Satya Veni and he wants your advice on two counters, that whether or not can he enter these names at this point in time, and any targets to keep in mind. Wants your advice on Genus Par as well as AB Capital. So what will be your suggestion?
So GDS Par, I think I maintain the stance that buying the stock maybe closer to 135, 40 mark could actually be a good zone to buy the stock, not at current levels. So in case if the stock happens to correct back to that zone, then it makes sense to buy for a potential target of maybe 175 to 190 for GDS Par. AB Capital, I'm extremely bullish. My sense is that the stock is going through a big turnaround mode. We've seen the stock moving from 110, 14 levels to very close to 200 levels as of now. I believe now the next stage of targets for EV Capital, if you have a time frame of 1 year plus, should be at least 240 to 260 in that time span. So if you are a long-term investor, 1 year plus time horizon, then I think 240 to 260 could be a modest target for EV Capital.
From Srinu from Vijayawada, purchase PCBL or erstwhile Philip Carbon Black at a price of around 162 rupees per share. Wants to know whether it should go ahead and book profits in this counter already or continue to hold on to it. What's your take on this one, Rajesh?
We are very bullish on this. We have been given a buy call since a very long time. We recommended this to our clients. The company is on the right track. The largest carbon black manufacturer, I would say, in India. They have plants not only in India but abroad also. Recently, the capex has been done. I think there are good numbers to be expected in times to come because we have seen the kind of rally in auto, and this company caters to tire industry also. So one can keep a medium-term target of 190, 195 odd rupees, but for a longer-term horizon, maybe higher targets are quite possible. So it's a hold from our side.
Continue to stay bullish on PCBL, and 190 is the medium-term target for Rajesh, but could go higher in the long term. But with this, viewers, it's time to slip into a short break, but don't go anywhere. We'll be right back. Welcome back. You're watching Buy Now Sell Now, a show where we get you answers for all your stock-related queries. On to the expert side, we have Rajesh as well as Kunal, both are with us to guide you better. Let's get once again back to your stock-related queries. And Kunal, the next question is on diagnostic stocks. This question is from Ron, and he wants your opinion on Dr. Lal Path Lab as well as Metropolis. Given the up move in the recent past, do you believe that he can enter in these names at this point in time and continue holding maybe for the next 12 months?
Well, it could be a good proposition, but I would advise to keep the quantity a bit low because these stocks have run up exceedingly high. They have an odd tendency of going through a multi-month correction. So my only concern is that you may not, you may be stuck into the stock for some more time in case the stock gets into a time-wise correction. So I think keeping maybe 50% quantity of the expected quantity which you're buying, I think that at current levels, and keep the remainder 50% to buy it on correction. Say if the stocks correct by a 7% to 8% margin from current levels, then I think you can continue to average further at those levels.
All right, this one is coming in from Sunny, and this one is for you, Kunal. He wants a technical view on Rajesh Exports. He has 100 shares at a price of 572 rupees per share on the charts. How is this one looking to you? Do you think that the buy price is at an elevated cost, or what should his strategy be?
Well, it's not very elevated because the stock, I think, if I'm not wrong, was even at 4-digit mark, 1,000 odd, couple of years back. So from there, the stock has gone through a correction. But the only concern is that, stocks like these, which which tend to be huge underperformers in best phases of the markets, betting on those stocks, adding on to more quantum into these stocks is not a great strategy. So ideally, you should avoid adding on to these names. And it's always better to switch out from stock to a performing sector or a performing stock. So I think in that regards, it could be a good strategy to switch, from Rajesh Export to some other names.
Sorry, once again coming to you. This question is from Sunny, and this is a Twitter query. He wants to know the long-term prospects for REC at this point in time. Can he enter REC, and any targets to keep in mind?
Well, I'm extremely bullish on REC. Especially, I think REC PFC have been two stocks which I've been bullish on, and my sense is that these stocks have just restarted a major breakout which was pending for these stocks for the last 10 years, 10 or 13 years, if I'm not wrong. So this could be a big reset for REC. Historically, we've seen that stocks, they tend to just go into a huge uptrend mode on long-term basis when the stocks give like a 10, 12 year trending breakout. So very difficult for me to assert on a target, but I think you should ride this trend for REC. And if possible, you can look to even add PFC for the next 2 to 3 at least from current levels.
All right, that's the view coming in on power finances. But coming to the next query, and this one is coming in from Saroja. And Saroja wants to know whether it's the right time to enter JK paper at current market price for the long term. What's your take on this, Rajesh? Ideally, I think she's given a time frame of 3 years as a long term for her for JK paper. Do you think it's worth the bet?
See, paper industry has been performing in the recent past. All the stocks have performed quite handsomely. Some of them have seen correction. And I think JK paper, West Coast paper are two of the paper stocks which stand out and one can accumulate for a longer term horizon. And JK paper, I would say, buy around 300 odd rupees, or a West Coast buying point would be around 450 odd rupees. For at least 3 years time horizon, they are very good buys.
Ajay is holding shares of BHEL, another counter you have been bullish on. He is holding the shares at a price of 90 rupees and wants to know what sort of a target you are looking out for BHEL, and like, can the stock cross rupees 100 mark? Other than that, what's your advice on Raymond? Is that a good buy at this point in time, or should he wait for some correction?
So BHL I'm extremely bullish on, and I think I remember that I mentioned that the stock should surpass the 100 levels pretty soon. So very difficult to anticipate that what time and when that would happen. But I believe that possibly in the next 1 to 2 weeks, the stock should be able to retest or surpass the 100 mark. So that's a near-term target which you can keep for BHEL. Raymond, on the other hand, I would be a bit circumspect in buying the stock at current levels, because look at it this way: the last 2, 3 years back, the stock was almost at 350, 300 to 400 odd levels. Now the stock is at 1700 plus mark, in a 1700 to 1800 zone. So I think in that regards, it could be a very steep price to buy the stock at current levels, because it may not just be a time-wise correction, but it can also be a more of a price-wise correction, which could hamper the near-term prospects for Raymond. So I would suggest to avoid the stock at current levels because of the elevated nature of the stock price. I think the previous stock is something which you can look to buy.
Okay, this one is coming from Mr. Korean, who is a senior citizen writing to us from Kochi, and this one is for you, Rajesh. He's holding a recently listed counter, that is IKO Engineering, for a price of around 464 rupees per share. He wants to know if it's a good stock to hold on for the long term. I stand corrected. IKO Lighting is the counter's name. He wants to know whether if it's a good one to hold for the long term. What's your take on this one?
See, though the company has been doing well, the valuations are quite stretched. So I won't suggest any buying at this point of time. Rather, if somebody is holding and sitting on a profit, one should get out of this.
Okay, moving on, and Kunal, what's your advice on Tata Consumers? Rajkumar has bought 200 shares at the price of 200 rupees. Can he add 200 more at current market price? What's your outlook on this one, since he's already sitting at great gains, almost 4x since the time he bought? So what's your outlook?
Absolutely. I think phenomenal gains. Congratulations to the viewer for holding on to a stock like Tata Consumer. And I remember, I think if I'm not wrong, that in the previous avatar, the stock was actually called as Tata Global. And that was a time when Tata Global was extremely volatile, very high beta. So it makes good credibility to hold on to the stock even at current levels. Yes, you can look to add the stock at current zone. So I believe Tata Consumer is a very classical low beta, high quality, strong performing, consistent moving stock from a portfolio perspective. And I think these are the kind of stocks which makes the portfolio not just robust, but also have a strong tendency to compound. So I believe Tata Consumer, even at current levels of 830, I think if I'm not wrong, where the stock is trading, looks fairly attractive. You can look to add.
This one is coming in from Chandrasekhar writing to us from Chennai, and actually we have a couple of Chandrasekhars writing to us, but this one is from Chennai right now. There's another one who's just written to us. He's from Mysore, but Mr. Chandrasekhar from Chennai has written to us, and he wants to know if it's right time to buy Tanla Platforms or Affle for a period of 2 years. If neither of them, then which one do you think, Rajesh, he should pick?
Tanla looks better out of the two, I would say. But going for a long term, I think there are better bets on technology space. Rather than going for these two companies, one can have a look at frontline counters like Infosys, TCS, Wipro, which are trading at a huge discount to the 52-week high. The numbers have been good, and I think going forward, even uh, despite the economic problems in US, UK, and Europe, I think these companies are going to give good returns, at least 15% CAGR in the next 3 to 4 years. So it's better to stick to larger names.
That's the advice on the IT names. Kunal, coming to you for this one. This question from Venkat Rao, and he wants to purchase Laurus Labs as well as BDL. So can he buy both of these names at current market price or wait for some more dip? What's your outlook?
I think both these stocks are looking attractive. Laurus Labs has recovered quite smartly. I think Laurus Labs and many of the other API names, these stocks have done reasonably well. So there seems to be a definite change of trend for Laurus Labs. So I would suggest that as a buy even at current levels. And which is the second stock you mentioned, Sisti?
Dynamics.
Sorry, can you repeat that?
BDL, Bharat Dynamics,
Yeah.
the stock is up 8% today.
Yeah, even for BDL, so it's been a late mover as such from the entire defense pack or the PSC name, but I think now at 1170, 1175 mark, BDL also looks attractive. So it's a more of a consistent chart, steady name, has moved up quite smartly on a longer term time frame. Recently, the stock has picked up pace, volumes have also moved up higher. So it's a good chart. You can look to consider that as well.
Okay, Kunal, another one coming your way from Karan Fernandez. He's writing to us from Mumbai and he has a query on one of your favorite stocks. That is Tata Motors. He has about 1,000 shares of Tata Motors, which he's purchased at a price of around 428 rupees per share, sitting on a very healthy set of profits. I believe the stock is also at its all-time high levels. What should Karan do with his holding right now?
Further and keep on holding the stock. I am very bullish on Tata Motors if you ask me from a long-term play. I think I remember advising the stock in 2020 second half closer to 100, 110 odd mark. So from there, I maintained the bullish stance, expecting the stock to break past the life high levels. That has finally happened in just like in the last couple of days for Tata Motors. I would still be very bullish. I think it's more of a reset which is happening for many of these auto stocks. When these stocks come back after 6 years, 7 years of a breakout of the previous highs, we've seen historically that these stocks are bound to get into a further uptrend. At least a 10 to 15% rally is what I would expect as a nominal case for Tata Motors, even from current levels. So I think you should look to consider holding on.
Okay, Rajesh, coming to you for the next one. This question is from Balakrishna from Chennai, and he wants to know, is this a right time to enter First Source Solutions?
Which one was that? First Source?
Yes, First Source. Yes, that's the one, First Source Solutions.
Yeah, one can buy. The company is doing very well. It's a BPO company belonging to the Sanjeev Goenka group. Recently, it has seen some kind of correction, but I think a decent target would be 150 odd rupees in the next 2 quarters. One can go and add this.
All right, this next one is coming in from Chandrasekhar. He's writing to us from Mysore. I will club his query with another viewer of ours who's also asked on AB Capital. I know, Kunal, you've given the bullish view coming in on AB Capital, but let me take Chandrasekhar's query first. He has about 100 shares of ABFRL, or sorry, I beg your pardon, 1,000 shares of ABFRL at a price of around 276 rupees per share, holding on to since the last 1 year. Should he stay put with ABFRL or look to switch to AB Capital instead or any other counter? And also you have another one that's from Rajesh. He has 280 shares of AB Capital, which he purchased at a price of 187. He's holding since 2017. What should he do?
To both of them. Now, it's a very difficult proposition to select between ABFRL and AB Capital because both the charts are completely different. ABFRL is the stock which, after a battering of sorts, if I can use that word, is now trying to get into a recovery phase, which I believe could get into a steady recovery. So, every recovery is recoveries are generally slow paced. You see a very gradual uptick for the stock. And then all of a sudden, when there is confidence in the stock going up, is where you see the pace of rallying up higher. So ABFRL is going through that first stage where the stock is gradually moving up higher, upping the base. The demand for the stock is also increasing slightly because of the way the entire sector has moved up. But AB Capital, I think, has gone through the second phase already. The stock is already into a very strong momentum phase. I think there was a lot of news flow for the stock, I think, over the last 1 to 2 weeks, and because of which the stock went to 200 and now it's come back towards 185 mark. I believe some more consolidation for AB Capital could be in line, but 240 to 260 is a target which I have for AB Capital. And for EBFRL, if you are a medium term investor, then you can keep out for a target of 260 at least for EBFRL as well.
Okay, Rajesh, coming to you for the next question. This question is from Krish from Chennai, and he wants your outlook on fact. This particular counter is not very far from its all-time high levels, but can he buy fact at this point in time? And what's your long-term prospects on this one?
See, new entry at this point of time would be quite risky. We have seen the kind of run-up the stock has seen. And I think the entire positives have been discounted in the price. If somebody wants to enter fertilizer space, I think there are better bets in this space. Maybe a Deepak fertilizer or a Coromandel would be a better bet than fact at this point of time. Yes, fact can be a good buy, but once it corrects for at least 15% from the current market price, that.
All right, so that's the take coming in on fact. But on that note, we'll slip into a break on this edition of Buy Now, Sell Now. But stay tuned, viewers, because there's lots more lined up for you on the other side. Don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now. And let's continue taking all of your stock-related queries. The next one is coming in from Hygienist Lobo. He's writing to us from Bangalore. I hope I have actually pronounced the name correctly. He has about 11,200 shares, Kunal, of Genus Power. He purchased this counter at a price of 34 rupees per share. What should his strategy be? Should he look to exit this one, or is it worth a bet to take and stay put with this counter?
Look to exit or book profits over here. Cheryl, if you ask me, I think it's a good time to book out profits because of the way the stock has run up. I think it's almost like a exponential up move for Genus Power in the last few days. The indicators have gone into overbought territory. The stock is at a huge divergence from its 200-day moving average. So I think you should look to book out profits for Genus Power. And I think if you're looking to buy back again, then you'll be closer to 135, 140 odd mark. Would actually be a good territory where you can look to buy back. So possibly a 20% correction from current levels is what I would expect. And in that anticipation, I would suggest a big profit.
Okay, Rajesh, the next question is for you. The question is from Suresh, and he wants to know your advice on Tata Power as well as GM Breweries. Any of these counters can be bought at this point in time with a 1-year time horizon?
Tata Power is a good buy. It has corrected quite a lot. The huge capacity, they're moving into solar. They sold some stake in a good valuation. I think on every parameter, Tata Power stands out. One should go ahead and buy. Maybe a 20% upside in the next 1 year. It's quite possible for a longer term horizon. Maybe much higher targets are there. So one can buy Tata Power.
Okay, this one is coming in from Govardhan. He's writing to us from Bangalore. He's not mentioned the buy price for DLF. He has about 100 shares of this particular counter. Kunal, I know it will be a bit difficult to gauge whether he's in profits or not, but what should his strategy be with DLF as of now?
I think you should stay put. The real estate sector is going through a reboot of sorts. The trend for many of these stocks have gone into a higher level of a breakout. So from being a daily to weekly chart breakout, these stocks are now showing signs of a quarterly as well as in the half-yearly chart. So that's a very encouraging sign for the real estate sector overall. I would suggest that you should stay put on DLF. If possible, then you can look to add the stock on dips or in a corrective phase. 8 to 10% correction is a good enough zone to add DLF. Or in case if you're looking to add many of the other peers, then I think I would recommend Oberoi Realty as well as Godrej Properties as two stocks which you can add from the real estate pack.
Okay, moving on, and Kunal, once again coming to you because this viewer wants a short-term outlook on Tata Investments. He has bought 91 shares at a price of 2,700 rupees and sitting at a huge loss right now. So what's the short-term outlook? Any hopes on recovery?
Well, there could be a recovery for Tata Investment, but I don't expect the recovery to take the stock back towards 2,700 mark, which is the cost price pretty soon. I think from a near-term play, maybe 2,450, 2,480 could be a target which you can expect for Tata Investment. The only good part is that the indicators have gone into a bit of an oversold territory. And today you're seeing a relief rally or a mild bounce for Tata Investment. I believe that if this bounce continues, then the stock should retest the previous month highs of 2,450 approximately. So I would suggest a hold till those levels at least.
Okay, this one is coming in from Sushil Kumar from Trichy. Wants to know about Shriram Properties. He bought this particular counter at the IPO at a price of around 118 rupees per share. What's your take on this one? Rajesh, stay put with this one?
See, one can carry on holding with the stock, maybe a target of 75 rupees in the medium term, one can keep and carry on.
Okay, moving to the next question then. And Kunal, this one is for you. This question is from Shekhar, and he has purchased 80 shares of Borosil Renewables from a price of 590 rupees. Is that a hold or sell at this point?
Well, I would suggest a hold for Borosil Renewables at current levels. I think the stock, even though has been going through a bit of a sluggish trend, but it's now nearing the breakout of its short-term moving averages. Maybe that could be the first indication that there could be a big reset or a reversal which could happen for Borosil Renewables on the medium to long-term charts. I would suggest a hold.
Let's kickstart with the rapid fire then. And the first one coming your way, Kunal, it's on Easy Trip. Sonia is writing to us from Gurgaon, wants to know whether it's the right time to buy Easy Trip.
Well, it could be a good time to buy the stock. I would suggest a yeah.
Okay, Kunal, Balan is having 15% profit in Anant Raj as well as Brigade Enterprise. Is that a hold or sell at this point?
Long-term investor, then hold.
All right, this one is coming in from one of our viewers, Swati, who has ACE, already has made 60% profit in this particular counter. Should she partly sell ACE and look to invest their money in Bajaj Finance? What's your take on this one, Rajesh?
See, although ACE is good, but Bajaj Finance is better. So it depends on your choice. I would prefer Bajaj Finance.
Okay, Kunal Subramaniam wants a technical view on Talbros Auto. He has bought these shares at a price of 277 rupees. What's the outlook?
Good time to book out profit.
All right, this one is from Saluja, writing to us from Delhi. Has all the financier companies like Poonawalla Finance, M&M Finance, as well as L&T Finance. What should the strategy be on these particular companies? Should one stay put with this one, Kunal?
Yeah, hold on.
Okay, Rajesh, what's your outlook on Sun TV? Madhavan from Coimbatore has bought 51 shares from a price of 455 rupees. Is that a hold or book profits at this point?
It's a buy from us. It's highly undervalued considering these fundamentals. It's a buy.
Okay, we spoke about Tata Motors, Kunal, but Soumya B wants to know about Tata Motors DVR. Can it be bought at current price?
Both of them are very similar, so I would suggest a buy.
Okay, Rajesh, what's your outlook on Birla Soft? Sanvi wants to know that can this stock be entered with a 9 to 12 months time horizon?
It's more of a trading kind of stock. One can keep a target of 380 and continue.
Kunal, IEX, Shiva has purchased this counter at a price of 164 rupees per share on the charts. How does IEX look to you right now?
Well, tough one. I would not suggest an average or add at current levels. Just hold on to your existing quantity because of the way news flow surrounds the stock.
Okay, but with this, viewers, it's the time's up on this edition of Buy Now, Sell Now. Thank you so much, Rajesh and Kunal, for joining us today on ET Now and helping all our viewers with their stock-related queries. But with this, viewers, it's time to bid you goodbye from me and Cheryl and the entire team who put the show together. But don't go anywhere. Markets and Noon will take the action ahead.